Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, May the 31st, 2017. It is the last day of the month. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, send me an email to quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to during the pre-market session, and then again during the regular trading session where we talk about analysis and trade setups. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metric. Excuse me. All right, let's get to the news. We did have GDP for Canada come out. It came out better than expected, 0.5 versus 0.3. 9:45 we got Chicago PMI. 10 o'clock we've got pending home sales, and 2 o'clock we got beige book. So a few pieces of news today. Taking a look at yesterday. Yesterday our main hypothesis was a rotation, responsive selling down into testing the range low and into the naked VPOC from the prior day, or Friday I should say, which was down at 24.14, and then finding response, I'm sorry, 24.14. Yes, it was. What was the? Anyway, we were looking for a move into the 24.08, 24.07, and then finding initiative buyers to rotate us back up and take out that naked VPOC at 24.14 and push up through to the 24.15. Hypo 2 was the opposite, and we kind of, we were kind of looking like we were going to rotate down and get the continuation back down, but they stepped in and then they just brought it up and went sideways around the 24.13, 24.12 area, and really tough day. I mean, only a 7.5 point range again, and that's the size of the range that we've had all the way back through Friday. And we had a very low probable stat that played out. We did not take out the overnight low, and we did not take out the overnight high. We have a 97% probability of doing that, and we did not. We missed each one basically by about a tick. So really, really tough trading the last couple of days. Take a look at the macro to micro. I always like to start my day. I use my paper money with a simple candlestick chart and a 9 EMA, 20 SMA, looking for slope and separation, strength of the trend, where the trend will be challenged, where there's any chart patterns or candlestick patterns that I want to pay attention to during the course of the day. You can see that here we are trading near the all-time high. The all-time high is not 24.17, it's 24.1775. And we're trading just below it right now. I expect to put in a new all-time high today. We've got the trend very strong on the monthly, very strong on the weekly. We are in sideways consolidation, flag formation on the daily, but we are very much in trend mode. We do not test the trend or challenge it until we get back down to the 24.0675. Going to the intraday, you can see that we've been in the sideways consolidation up here near the all-time highs for the last 4 trading sessions, 2 of them being obviously holiday sessions. But once we got up here last Thursday, we've basically gone sideways. We're above the 9 and the 20 on the 4 hour. On the 1 hour, you can see that we're getting this continuation pattern right now, strong move up, very active OTF, and that's to be expected as we go into the end of the month. There is going to be some OTF participation, and they're doing it early in the Globex, and basically trying to break us out of this balance. But the trend is up on the 1 hour, on the 30-minute, same thing. We do have a possible FUBAR Mr. Sneaky on the 30-minute with technical gap. Gap close is going to be somewhere around 24.15, thereabouts likely. You can see that we did put in a double top here at 16.75 on the 15-minute. We've come back a little bit. You know, that gap fill is going to be about 24.15. Going to the 15-minute, or sorry, the 5-minute, you can see that we've been banging against the 16.75, unable to break through it so far. We've come back and we're now challenging the trend. We do not violate the trend until we get below 24.15 on the 5-minute. I mean, you know, we're going to get some backfilling, but the risk to remember today is going to be to the upside. Taking a look at the composite bigger picture, you see that we've come up, and yesterday we were just basically chopping around in the 24.13. We closed at 24.11, and now we're trading above that 13.50. 13.50 is going to give you the indication of whether or not we get continuation, or else we get more chop between the 13 and the 09 area. So just 1350 is going to be somewhat of a over-under line for me. 950 is going to be the over-under line for me, but I'm going to be watching this 13 as a key trade level today, because you know, I'm thinking we're probably going to pull back into this area and then get continuation up. Obviously, the high from yesterday, which is up at 1450. You know, is likely going to get challenged, but they could bounce there as well. And then you're looking for the breakout of the 24.1775. I expect us to take out the overnight high. In fact, we're likely to put new overnight high in while we're talking with a make and break. Looking at the overnight session, inventory is about 75 to 80% net positive. You can see that during the Europe session, when Europe opened, you can see that, you know, as we move forward and some of the European news came out, you can see the OTF was very active on every push to the upside, and then they step away, and we get the pullbacks in between. But you can see that somebody you know, large is positioning and pushing this market you know, to new highs. So keep in mind that the risk is to the upside when the OTF is stepping in. They're not selling, they're buying, and you know, looking for continuation. The month open is 23.8150. We have 1 day trading. Our full session ATR is daily is 1528. So that puts our monthly critical mass all the way down here at 96.75. What does that mean to us when we're trading at 25.15? That late in the day, we're likely to see capitulation this afternoon, and we're likely to drift to the upside. There's very little probability that we're going to go up and or come down and get below the month open. So we're going to have a bullish month, and we're likely to continue to the upside as the sellers capitulate. I don't think you're going to see a lot of heavy selling today. It could happen, but certainly late in the day you want to be very careful if you're trying to get on the sell side, because you're going to likely see them push this into the close and get a drift up with no strong selling. Our overnight low is all the way down at 1150, just below our VPOC. Our overnight high currently is 1675, just below that RTH high at 17. And our upside daily ATR based on a 20-period daily of 1528 is all the way up at 25 and a quarter. So we do have range capabilities to the upside. To the downside, currently off of the 1675, our daily downside ATR target is all the way down here at 2401. There is an LVN right here at 1475. That's right at the range high from yesterday. That is obviously going to be a key level that we're going to watch. We do have a naked VPOC from the holiday session. A lot of people don't watch the holiday session, so a lot of people that scrub their charts aren't going to have this naked VPOC. I do, because I do watch the holiday sessions. It's a trading session, therefore I want to know where the levels are. We have the mid all the way down at 1350. That is our value area. This is a very valid value area, so we have to watch that area as our secondary possible. So this whole area between 1450 and 1350 becomes a large trade area where I'm going to watch to see if there's buyers that step in. But if we do not hold 1350, okay, then I'm looking for the push down to the 12 and the takeout of the naked close at the 2411. Then the next area that I'm going to watch is that 950. I'm going to move it all the way up to 975. This HVN, it's actually 2410, I'm sorry. You know, I'm watching the value area low. I expect if we get in here, we're likely to get an 80% destination trade. It's only a 2.5 point value area range, so I'm expecting to go through it. And then we've got the 2408, and then below that we're targeting the 2407 and a quarter, and then we've got the gap fills down here and our key line in the sand, which is still down at 2404. So those are the levels. Up above, there's really nothing. We've got a measured move up here at 2475. Weekly really isn't going to come in, but let's just get that. Hold on a second. I got to get the weekly low. The week low is 2410, and our weekly 20-period ATR is 33,925. So our weekly ATR takes us all the way up to 2444. So way up here. So this gives you an idea of, you know, if we continue to the upside, we've got range capabilities to go into the mid 2400s. Okay, we're currently trading above the range, above value. I always talk about this. If you're opening up with a gap, you've got to have the possibility that you're going to get an open drive or an open test drive and push up right away. So just be careful on the open. We're going to end up with a tick gap, most likely to the upside, but these type of tip gaps, you've got to be careful trading to the short side and make sure that there's no driving characteristics. We're currently trading at 15, 16. So our half gap fill is 1350. That's against the range open. Or the open gap, I should say, against the close. and it is a prox because of the fact we don't know exactly where we're going to open at right now. So in terms of hypothesis or hypotheses, I'm looking for an open auction out of range. I'm looking for responsive sellers. Again, come down, test the range and the value, and somewhere between the 14 area and the 11 area, I'm looking for a rotation up and taking out the overnight high and making new all-time highs. And how high we go, I don't know. Lately, we've been doing the VPOC to the tick. If you look at Friday, was it Friday? I don't know. I can't find it right now. I'm not going to look for it. But lately, we've been coming down to the tick and bouncing off of that VPOC. So that's why I'm thinking that could be a good spot for a bounce. But we could not make it and just leave it and push up. There was a couple times last week that we came right to the tick of the VPOC and then bounced from there, and that turned out to be the low of a large rotation. My secondary hypothesis is an open auction out of range, a push up, make new highs, and then go sideways, chopping between the 17-18 area and the 13-11 area, and just going sideways as a sideways consolidation. We still have balance around 1350, so we can fill that in and create a distribution zone here. Hypo 3 is a open auction out of range, a push up into the overnight high, possibly fail to break out to a new high or put in a new high, then rotate back down, okay, come back into value, chop around value, and then push lower and close somewhere between the 24.05 and the 24.09, and just chopping the lower distribution as we fill in this part of the composite profile. This is a pretty high kurtosis around the 1350, so we could widen this distribution zone just a bit. And then Hypo 4 is a open auction, either fail to break into value or fail to break in range, and then drive up into the 20s, chop around the 20s, and then get continuation and push up and test the 24, 25, 24, 28 area and close somewhere up in new all-time highs. And then the alternative is a failure to make a new high, rotate down, come through value, chop around in the 09 to 13 level, and then fail miserably and come down and fill this gap and push down to test 2400 and leave a lot of longs holding the bag. Those are my hypotheses. I did put this chart in the room. I posted this on the 25th in the room of the cup and handle on the larger time frame that was setting up in gold. We currently went up and just broke above the right rim. We're currently trading just right on the rim right now, just chopping around right here in the 1270 area. First target is 1283.70. Second target, main target, is 1295, and of course the extended target is 1314. Now, this is a longer time frame chart. I'm not saying we're going to hit this today, but I just want you to be aware that we are now confirming this pattern, and we are in the breakout mode above the right rim. So it's something to pay attention if you're trading gold, because a longer time frame. That brings us to our gold chart. That one. You can see that we've come up and we're now chopping around this balance. The prior microcomposite VPOC was 68.90. We're chopping right around it. This current 4-day balance is at 69.9, and we're chopping around in this balance. The key level to watch is the breakout of 72, and above 72 you're going to be targeting the prior value area, trip through value up into the 76.70, and then our key line in the sand above is 80.90 with that first target at 83 area. Next big destination is obviously up here at the 1290 and the primary target on that cup and handle. If we do not hold above 65, there's still this 64 level that we could bounce off. That's the value area high from the balance that we just broke out of. But if we get in that, then I'd be looking for a trip down with the first target at 61.40 and possibly back to the composite VPOC at 1258.1, which has been adjusted for the Q contract. Remember, we've rolled over to the Q contract, which is the August contract. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.